All right, I think we're recording now. All right, so we got futures opening up. Most likely a quiet open. Looked like a little green. Up 3. Bitcoin is still flying, right? Now, what is that telling us? Oh, it was higher than this, though, right? Wasn't it over 11? Oh, yeah, it was up here. It just pulled back just now. You know what? This Bitcoin thing too. You think it's a coincidence after they pull the plug on the futures? That's at the bottom there. Come on, that was the spot, Lewis. Yep. If you were ever going to buy it, that was the spot. Unreal. All right, so it looks like a quiet open here. Looks like a little green. Yeah, these futures are crazy overnight. God knows what news comes out. Trump tweet, who knows? But more importantly, what I wanted to discuss is how we look coming out of sentiment this week. All right, because this is where, for me, it gets tricky. And I've been saying that a lot, as you guys know, because of these damn V-shaped rallies. The velocity, the acceleration of these squeezes off these pullbacks are just mind-blowing, mind-blowing. And we spent a little time talking about well, we've been talking about this for a while now, but we were talking a bit about this before we hit the record button here, and just how a lot of people have been telling me this. If we talk about we spend a lot of time talking about waiting for that fat pitch, right? Especially anybody who, and obviously a lot of people here are members of Steamroom private Twitter or the trading room. We wait for where everybody got the whole retail crowd all bared up. Everybody's leaning hard put side, and then you got basically you're just waiting for that trigger for that big squeeze, right? And that's the spot, okay? From everything where I follow, if I could trade one setup, just one setup throughout my whole career, right? If I had to pick one setup to make money off of, it would be that one. All right. Now, obviously, it's easier said than done because the discipline allowing that setup and waiting for that setup and then being ready to fire when that setup is around. Words can't do it justice of how difficult it is. Okay. But if I could work, tirelessly on one aspect of my game and master that and just trade one thing to find success, it would be that. Okay. And that's simply they reel in all the bears, they shake out all the longs until it gets to an extreme where it's almost like that rubber band. You pull it back, and then boom. All right. But the problem, and it could be a variety of reasons, right? Machines, quants, whatever it is. But the issue, the last few years, I would say honestly, I don't know. It seems like everything changed post 2008. Maybe I just feel that way, but since 2008, these rallies, if you're not ready for that squeeze, okay, if you're not ready for that move and you're not positioned for it, you're chasing, okay? You're chasing. There's no ends about it. There's no pullback. Everything's a V, and that can get really, really frustrating, okay? Especially if you're sitting around and waiting to make a dent off that setup. All right, that can really get to you. So, we spent some time, we've been spending some time talking about that. I've been talking about people I used to trade with and how they're adjusting to that, because now, it's not just one or two rallies here. It's more commonplace than basically the opposite of that would be, this is what you usually have, okay? Where's my thing here? And you guys know what I'm talking about. You would have something like this. Can I draw on this? Where you get the squeeze, okay? And then you would get, a retest like, right? And then a rally, then a little pull. And basically that, I don't know what kind of drawing that is, but you get the picture. Basically that allowed bears to continuously get reeled in, okay, thinking the rally wasn't real, and shake out any longs thinking the rally was real, right? But now that doesn't exist. This is what you get here. Look at the squeeze here off the lows, okay, off this little pullback, all right? You basically had 5 days where if you took a little mini vacay, you missed the meat of the move, okay? And even though the markets go higher after that, like you can see the market pushes higher, it's not the same, okay? It's not the same because here, basically, you literally could throw a dart, all right, at any name that catches a sweep, all right? Any name, period, more than likely, and you're gonna make a good amount of money, all right? As the rally drags on here, like we're experiencing now, it has the tendency to get thinner and thinner and thinner. And that's where more frustration builds because now you're buying names that aren't participating in the rally, and that can drive you nuts. All right. So basically, what it comes down to, if you're looking at this particular setup and capitalizing on it, this is the move you have to catch. So, like Lewis was mentioning earlier, okay, before we hit the record button, the smarter thing to do, okay, when the signals are there, meaning you have all the sentiment stuff lining up, right? Everything, you can almost feel it. You can almost feel it when you get to that point where the bears have just overdid it and bulls want no piece of it. You're better off being early than late. And what you have to start to do, you have to start to at the least put some money to work. Okay. And that's what I mentioned. A couple of guys I used to trade with, because they've been complaining about the same thing, obviously. What they've been sharing with me is that what they do, they look to at least put on some positioning in the ETFs or make a play on the indices and look to be early with that, okay, and then focus on the names and try to time it a little better, if that makes sense, okay? And the other thing, Lewis again made a great point before we hit the record button. The key to that, though, the key to that is buying enough time. You know what I mean? Having enough time just in case you are early, all right? Because what happens is if you're early, even if it's a couple days early, okay, and you guys are looking to put some sort of stop loss and limit your downside and all that stuff, if you're in weeklies or bi-weeklies or even front months for that matter, you're going to get shaken out. Okay. You look around you with traders, okay, trading in weekly and bi-weeklies, they can't sit underwater for 5 minutes, let alone be a day or two early. And if you remember around the holidays, that bottom too, okay, which was a lot scarier, right? Because the holidays and liquidity, the same thing there, okay? So even if you started, which sentiment was already flashing green here, right? We were talking about that. So even if you already started putting money to work here, right, and gradually added to it, even if it was into strength a little bit or further into selling, your entry would be on an average around here. And when that squeeze came, it's more than worth it. Now, again, the key to this is when sentiment lines up full blown, okay? And the reason why the key is sentiment is because you want a strong enough squeeze there for it to be worth your risk, right? Because if you just get a couple days squeeze like this and you're early, then obviously you're lucky to make a little bit of money or break even. All right, so that's been a lot of frustration. Again, there's nothing more frustrating in this game when your signals are right? You're ready for it. You're doing all the right things, and you still can't take advantage of it. There's nothing more frustrating than that. All right, so don't feel bad. Don't let it get to you, because there are a lot of people dealing with the same frustration. All right, this rally wasn't your normal squeeze. Coming out of these corrections, you wouldn't have this ramp back like this pull never existed. I mean, look at deer. Okay, if you guys remember, we were talking about how the industrials, right? Remember the last webinar we had? What was it, 2 weeks ago? Or was it 2 weeks ago, a week ago? We were talking about how the smart money for the first time was net long the industrials, okay? And the place we need to start looking, especially into any further weakness, were the industrials and all the trade war related stuff that got battered, okay? Look at this deer. Look what just happened to this deer in a matter of a couple of weeks. Basically, this whole down move from May wiped out, right back to where it started. Right, exactly, Tree. So, and the thing is like, okay, we're still, right? We still make money off the setup. Like I know a couple like Tree, you, for example, you mentioned to me how you traded the MMM off the lows, off the industrial setup. Several of us had the Caterpillar off some flow, right? But if the velocity wasn't there like this, that's where you make your years or setups like that, because the ability to, let's say you get a little rally and then you get a 2-day pullback, right? And then you have the opportunity sweepers come into that pullback. That's another entry on that thing. Right now we have one entry, and now if you want to buy deer, look where you're going to buy it, right? Look where you're going to buy this deer. Screaming through a niner, how many straight up days? Like, how can you buy this thing right here now? So that's my little vent here on what's been going on and why things have been getting tricky for me from where we are like right now. All right. And I'll use that as a segue into what sentiment's showing us and how that may play out going into, we got a big week with the G20 and news circulating 24/7 around us, okay? But let's get to, hold on, let me pull this here. All right, so coming into the week, let's set it up that way. Even though we've had a significant rally, right? Pre-Fed, banking on rate cuts, the whole 9 yards there. We still had a nice setup out of the industrial sector, okay? And again, the smart money getting net long there. If you guys have no idea what I'm talking about, you could probably find a recording of the webinar. I think it was a week or two ago where we were talking about that. I'll even go over it quickly once we get into sentiment, okay? But let me get into where we are now. All right, so I broke it down here, especially because we have, a few non-members, well, more than a few, but social media, we opened it up to this week. So just so people could understand it a little more clearer. These are basically our key signals, all right? So if you're a member of Steamroom Private Twitter, this is basically what our focus is on every single day, okay? We're looking every day, we're looking for information out of this stuff to get a handle on where we are as a whole in the market, okay? Flow has been bullish. The sweeper activity has been bullish. Yes, there's been some put buying, in my opinion. More of the variety, you had a June expiration, okay? You had a big monthly expiration, and even bigger because of the magnitude of the rally we just had, all right? So anybody who had protection and wants to replace that protection, that's, in my opinion, where the bulk of the put buying was that we've seen in recent days, okay? So as a whole, flow has leaned bullish. The sweepers have leaned bullish. I would say this, though. They are not aggressively sweeping the board like we saw out of the December correction, okay? You guys have heard me say that. They've been a lot more selective, All right, a lot more selective. Usually they come in, they hit a name in a group, then they come in to the rest of the group. They've been really selective in their names, and even in their sectors. There's no real sector focus, in my opinion, out there. They're not coming after the industrials in full force, the banks in full force, tech in full force. It's been scattered, without a doubt, scattered and selective. And what that tells us is that, obviously when you have a squeeze like we just had off the lows, you're going to see bullish activity, right? You get players getting squeezed, they're sweeping calls. That grabbing, that me and Tree, I like to use that term a lot these days. Grabbing meaning players just looking for exposure. You understand? Because when you get this type of move, right, and where everyone's positioned on one side, right here into the lows, you have everybody out of equities, right? Everybody inputs short, hedge to wazoo, okay? And when you get this ferocious turn like this, okay, players are grabbing for exposure, okay? They need to get long stuff, right? They need to take off their hedges and get that long exposure back up, all right? And that's where we see a lot of this sweeper activity come into play, where it almost looks algo-like, right? Like machine-like in big names, Apple, boom, 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 Facebook, boom, 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 especially early on in the rally. So there's been a lot of that, okay? A lot of that. So that's where I would say the flow is right now. Bullish, but I've seen better quality out there, and I've seen more aggressive activity out there. So that's where we stand there. As far as sentiment now, the other side, okay, short-term sentiment, meaning the extreme short term, right? We talk about this all the time. You got short-term sentiment, then you have an intermediate term horizon, and then you have positioning, which I think is more of a little bit more than an intermediate term, okay? That's people managing positions rather than trades. The short term is trading, right? So this ST trader sentiment, that's what it is, short-term trader sentiment. Obviously got hot off this rally, okay? Into these highs, you see these pink bars. We got a sell signal from our short-term trader sentiment indicator, okay? Also on that short-term horizon here, let me show you guys, the put to calls are a little, well, pretty low for my liking. All right, anytime you see, I got a chart here to show you that kind of. Let me see, this one does it better, I guess. So basically where you had an elevated put to call into the lows, that washed out completely. The equity put to call, you got a 5 handle on the equity put to call. Let me show you guys that. Hold on. I might be able to get it on this quicker. What the hell did I do with it? Oh, you know what? I got it in here. Hold on. I don't have it open. So, and those of you who aren't members, you guys can simply look at put the calls and get a gauge. Again, you can't use it as exact buy sell signals, but you can get a gauge on how players are positioned. So that's where we are going into Monday now. All right, that's a pretty low number for the total put the call. And anytime you got an equity put the call with a 5 handle, that's not where you really want to be focusing too much on the long side on the indices. All right, and I say on the indices because you can get major rotation into some groups that have been laggards, and this may not apply. You know what I mean? If you get that major rotation. But I'm talking about the indices now. Again, low number here, low number here. We'll see how that plays out going into early next week. Now, the other thing I wanted to share on the short-term stuff, and those of you who are members know, they change quickly, okay? In literally, we got some that intraday fades can help a lot as far as soften some of the heat out there. Definitely, you get a down day with some news around it, right? A Trump headline or something, and you get these things washed out in a day. All right, that's why they're short term, and they're short-term for a reason, but it comes in handy for us who are looking to be nimble and on entries. Okay, so even if you're not a short-term player and you're not that tactical, okay, these signals still could come in handy, because let's say, you're looking to take, you're looking to find an entry on SPY or ES or in the name or whatever the case may be. If the short-term signals are hot, that's telling you to hang in there, right? Chill out, let things cool off a little bit, and then reevaluate. All right. So that's where they could come in handy. On the flip side, I see a couple of you guys asking. On the flip side, an equity put the call, anything with a 7 handle, 0.7 or higher. Okay, if you're in, I got my daughter giggling in the background. If you get anything on the equity put the call with a 0.7 or higher, if you're in, I would say like an uptrend, right? That alone is a signal to look for an entry, in my opinion. All right, the only time a 0.7 wouldn't be a place to look for an entry just off that would be if you're already in the heart of a correction. All right, 1 and even 1 or higher, that's panic on the equity put the call. All right, you see a 1 or higher on the equity put the call, you need to lean long immediately. Okay, I repeat, a 1 equity put the call, and you need to start looking on the long side. If you're shorting into an equity put the call over 1, you need your head examined. All right, that usually comes at the tail end of corrections and have nailed significant bottoms. I'll give you the last one reading. We used to have a lot of 1 readings. Now they're rare, really rare. The last 1 reading, okay, was into the December lows. You could go back and check that. All right, that was the last 1 reading. This pullback here, I think the highest we got was 7.7, something like that, around there. All right, but again, these are right now, these are not where we would want them if you're looking to get long the indices here. Let me get back here. All right, so now that's the short-term stuff, right? The squeezometer, that's another extreme short-term indicator. That's intraday. It moves intraday, okay? And more so now than even in the past, it can vary from the others. And the reason for that, though, like I said, those fades, okay? If you get a headline intraday and you get one of these days where the market goes from up 1% to flat, right? You know what I'm talking about, those big fades, that can really cool off the squeezometer in that intraday positioning. All right, so the squeezometer we use, a lot of us in the room use for basically what's in the name, intraday squeezes. Okay, so when that lines up, we're looking for, some flow to pretty much trigger a squeeze. Right now, we're going into tomorrow above neutral there as well. So all the short-term stuff, okay, all the short-term as a whole is basically above neutral and not ideal to where we would want to get long. All right, makes sense. Intermediate term, okay, and that was one of the beautiful things of the prior 2 pullbacks, okay? December, we had every single indicator on here flash green, okay? You had the short-term stuff, they signaled early, there was still some selling. Intermediate stuff, they came next, okay? There was still a little bit more selling after that. And then the positioning stuff, that's when the favorable backdrop came there, and then you had them all line up. This recent pullback, basically, we came really close on all these intermediate term indicators, all flashing green again off this little pullback, which is quite amazing. Okay, and that's, again, if you members know, that's where I hopped on that video and, that morning video and told you guys, listen, these things are a little too out of hand right now, and we need to start looking to get long some stuff into any further weakness. The reason for that video and that post was because a lot of the intermediate term stuff was signaling green. All right. So again, Intermediate term now, neutral off this rally. Okay, we come from buy signals to basically neutral. So we're still okay there. You understand? We're still okay there. Now, here's the interesting aspect of everything, the positioning side. Usually you get a lot of times where all of these line up, okay? All these line up. If you got intermediate term sentiment neutral, a lot of times the positioning sentiment will be neutral, okay? The positioning sentiment out there is mind-boggling, mind-boggling. Now, it's for good reason though, okay? You think about what's going on in the world, all right? Nobody is positioned for huge upside out there in these markets, okay? That's why a lot of people compare it to like 99 and you hear all that nonsense. It's nowhere even close to that, okay? On the positioning front, it's the opposite of that, okay? You have all these funds, right? All this park money loaded up in money market funds, okay? Loaded up in utilities, loaded up in every defensive place you can be, okay? So right now on the positioning side is quite favorable, all right? And I got a couple things I wanted to show you off that. I don't think I posted them. Let me show you. Two charts in particular off Sentiment Trader. Let me see if I posted them or not. Bear with me 1 second here. Oops. All right, I think I got one of them while I'm posting the other here. Oh, here. Okay. All right, so this is in the futures market. All right, please, with the giggling. Here's the futures market. All right, so this is small spec money, position money, right? You see small spec index positioning in the indices. So meaning ES, NQ, YM, all right? And you could see where this thing just came from, all right? So now listen, they're back net long by a tiny bit, all right, for the first time off this rally. All right, so we don't necessarily have a bullish signal out of that. But what it tells me is that any little weakness, again, you heard this, from the last time we spoke about this, right? Any further selling in this market, in other words, you get a period of a week or two of selling in this market of some fear, where's this thing going to end up? Right? Where's this thing going to go? They're going to end up net short again. And unless you think these guys are going to make a score for the first time in my career, as far as I'm following these things, everything on the positioning front tells me to continue to look to buy pullbacks. All right. And I know that gets difficult, right? It's easier said than done. Look to buy pullback. What pullbacks? 1-2 day pullbacks, right? 5% pullbacks, and that's where things get a little tricky, right? When you got to wait for that sweet spot again. But what this tells us is the sweet spot is not too far away. Because look, that's where things can be worse, right? That's where it could be worse. Or let's say right here, where the spec money is really long. And look at this. You got to sit through this grind knowing these guys are net long until they get washed out completely for a bottom. You know what I mean? Okay. So we're over here right now. I don't even know. This is probably neutral, if that, not even net long. Okay. So the way I look at it again, like I just mentioned, is similar. I mean, not even, but close enough. Right here. I use this as an example. You guys remember the last time. Here's a bottom, right? They were short out their ears into those lows, okay? They got squeezed to death, right? This thing, they were basically hardly net long of this rally, similar to like we are now. Now is even worse, okay? So what happened? Look, there was another pullback, but off the pullback, these guys are net short again. So where is this going? You think this is going to go down here like this with these guys all in short? You understand? And The longer, guys, the longer this lasts like this, like look here, you see this? Okay. All this here, okay, and this is from 2015 all the way to late 2017, so a period of 2 years, okay? This told you the spec money, not once in that period, okay, while the market was pretty much near new highs, was positioned aggressively for upside, okay? 2 years, that basically this whole period here. And that's a bullish backdrop. You understand? That's about, again, that doesn't mean markets can't have pullbacks. You understand what I'm saying? But the difference is you, especially if you're shorting and stuff like that, you want to be able to be ready, especially now more than ever with these V shapes. You want to be ready when these things signal again and flash green off a little pullback, even though it's a little pullback, you got to remember that even though it's not that big of a pullback, these guys are short. These guys are short. Anybody have any questions before I go on to any of this other stuff, just in case you never saw these things before? Let me see. There's a couple of good comments too here. Let me see here. Hold on. Oh, let me put this in chronological order. Let me tell my daughter too to cork it. I don't know if you guys hear it, but she's giggling in my ear. Oh, you're giggling and I hear it. All right. All right. So let's see here. All right. Sean's saying great explanation. I'm glad Sean understands it. Oh, quiet, please. Didn't the melt up a few months ago show they were net long? The melt up a few months ago? No. No, the last melt up, you're talking about off the December low? The last melt up, this? She's giggling. What are you gonna do? The last melt up, we got to barely neutral here, if this is what you're talking about. What's the index for ticker? There's no ticker. No. You can't. This is off Sentiment Trader. This in particular, this is out of the COT data, off the COT data every Friday. That's where you get it from. Tree saying, before getting too excited about the BAML, sorry, there have been 14 months since 07 when equity allocations dropped more than 20%. The S&P for a negative month later after 13 of them. Not everything is contrary. The BAML, the sentiment survey. Those are surveys too. That's the problem with those things. You know, those are the surveys that he's talking about, Tree. And, you know, surveys, it's easy to say, you know, how bearish or bullish you are. There's nothing better than when people are putting physical money to work. You know what I mean? So this is what I see, you know, off the COT data. This is not the survey stuff. This is like, again, we look at the commercial hedgers for smart money. You know, this is basically the dumb money side of it. So if they go net short, you expect buying or a new buying close. No, so basically, you know, this is the speculative money out there. These are the small speculative money on gambling on the indices. And they're telling us, you know, that basically they were net short. They're off this week is the first time they're net long since the lows. You know what I mean? The iPad there. Oh, this is the first time. All right, so let's get to some of the other ones here. Let's see. The put the calls. Do I have any other sentiment stuff? Oh, here's one. This is intermediate term. You guys know the fear greed. Okay, so again, this is more intermediate term. This is not positioning. And you see, we're neutral here, right? This is not up here like we were here, the prior tops, basically neutral. The DSI, that also was bullish. Now that's getting a little too hot here. There was one more I wanted to show you. Hold on. Oh, here's another one from Sentiment Trader you guys like. The hedge funds. That's where they are now. So remember, this is again positioning. This falls into the positioning camp. All right. If you remember, right, this is what we were concerned about. Remember, they got long into this. They finally got long after not being long the whole freaking rally, they said, let's get long now up here, right? What happens? They get run over. So now what we were worried about, this could go two ways. They go all in and you get this, or they get spit out with the market weakness. Now, they didn't get entirely spit out, but you can see little by little, they continue to sell even as the market pushes higher. That's not bearish. That's a bullish backdrop as far as positioning. Okay, what would be bearish is what we were worried about, this. Okay, you think it's a coincidence that the October highs, this is the October highs before the biggest meltdown that we've seen since 2008? Is it coincidence? I mean, can it be coincidence? You know, and again, it's not even the area matters here, how net long and how net short, but what you keep an eye on too is the velocity of them getting long, you know? So you can see how quick this moved out of nowhere. That means they're scrambling to get long, okay? And you can see here too, right? There was some velocity there. Remember, we were watching this thing for months. We were watching this, and it just did this and this and this, and then finally something changed right here. Okay, but we had two options, good and bad, and the good option played out for now. All right, you want to keep an eye again. If you see this like that, then you would be concerned, and then the difference is this, guys, okay? What I'm showing you here is telling us to be buyers on pullbacks, okay? And if it was the opposite, it would be telling us to not be buyers on pullback, and the market has some work to do before we get a buy signal. That would be the difference. All right, I got one more to show you. Actually, I got a couple more things here I wanted to show you guys. Hold on. Did it come through? Hold on. All right, this right now is the opposite of that spec money. Okay, and this is the smart money. All right, so these are, you hear the term commercial hedgers, right? Their job, what they usually do when a market rallies, they continue to add hedges onto positions. Okay, when a market sells off, okay, they loosen up, take off their hedges, okay, until it reaches an extreme, and then what they'll do is they'll get net long at a rare occurrence, meaning they feel the selling has been overdone, right? The spec money is all in short, and they see it as an opportunity. That would be this here. Oh, what I do? I did it backwards? Yeah, I did it backwards. That would be here. This is supposed to be green here, okay? This is supposed to be green. So this was a rare occurrence, the beginning of the year, where the spec money was so negative that not only did they take off all their hedges, they got net long for the first time in a while, okay? And you can see as the market has lifted, this is again the January lows, December lows. As the market has rallied, little by little, you see they're taking off their hedges, right? So that's where they are right now. My takeaway of recent here, you can see here the market pulled back and they already were willing to take off hedges again. That doesn't always happen. You see, a lot of times this will go from one end to the other. See, this by right, this is supposed to be green. A lot of times they do it the other way, but it's easier when this is supposed to be bullish and this is supposed to be bearish. So they got it flip-flopped here. All right, so this was bearish, and then they took off hedges until they were long. All right, so that's the smart money, the opposite side of the dumb money. All right. What other things I want? Oh, here is one more. Oh, no, this is gold. I'll show you guys gold. I see a couple of people asking for gold. Hold on. All right, here. And this is the industrial guys. Remember the Dow, the DJIA, the industrials, where we wanted to make a play on industrials a couple of weeks ago of this signal. So this is basically what we saw here. They were net long for the first time since 2015 lows and 2016 lows. Okay, they were net long for the first time. They almost got there in off that December low, but not quite there. All right. So this was telling us that there may be rotation, right? There's the possibility of rotation into the industrials. That's kind of what we saw here, right? The industrials outperformed last week. And you can see they took off some of those longs into that. All right. But again, look where they are, right? Compared to if they're, yeah, these are the industrial hedges. Smart money in the industrials. So look where they are compared to where they could be, right? Into a rally. You know, this is not, again, this is not bearish. This is not bearish. All right. So that's all that, all this stuff. And again, if you're wondering, if you're members, this is all stuff that I point out to you guys. You don't need to, pay attention to each and every one of these things. This is what makes up this. Okay, this is what makes up basically the stuff we talk about each and every day. So I update members on this stuff every day. And when there's something noteworthy, like recently that what we found in the industrial indicator, obviously I'm going to let you guys know about it. All right. So if you have the ability to take advantage or position or get ready for it, you get a heads up on that front. You don't need to have experience with these indicators. You know what I mean? Okay. That's what you would be a member for. All right. So one more thing I want to show you guys, just so you get an idea of where we're at as a whole. All right. Here's another one. Even better. Let me show you the NDSI, which was even better. Okay. This was another intermediate term indicator / short-term / intermediate term indicator that got us excited into the most recent lows, the pullback. This is where we were, okay, off that little pullback. This is where we were in December, okay, off the meltdown. So you can see, look at this wash, all right? Granted, from cooked, look at this wash off that pullback of what? What we were down off the highs? 5%? I don't even know exactly. All right, but you can see what it did to sentiment. Okay, completely washed out. This is the daily sentiment index. A lot of you guys might know this. It's a popular index. All right. And now, again, we talk about the speed of these things. Look where she is now. All right. Look where she is now. All right. So I just wanted to show you guys, again, not to confuse you, everything I'm looking at and what it means to me in simple English. You guys were asking for gold. Gold is cooked on pretty much every aspect of sentiment. Gold is pretty much cooked. All right. So the takeaway from all this now, all right, in simple English, is that over the short term, okay, over the extreme short term, we could use some digestion. Okay, we could use sideways. We could use cooling off, right? Can the market go higher? Of course the market could go higher. But the problem is, okay, if the market goes higher, the longer it goes higher and runs through some of those hot indicators, but once you start getting those intermediate term indicators hot, you end up that, right? This whole move came into all those hot indicators. And then this had to happen. All right. So that's where sentiment plays a big part, okay, in this game. All right. we looked at sentiment, we said, all right, it's not risk reward wise, right? At this time here, risk reward wise, it doesn't pay to get married to any long positions here. All right, if we're going to trade anything, we got to be quick. All right, we got to take what the market gives us. We got to make sure equity, make sure you have your stop losses tight, make all that, the whole 9 yards. All right, because if you said, oh, you know what, the hell with those sentiment indicators, it's Jesus talking about, I'm going to sit in my longs. Price means everything. The price is everything, right? You get all that. I get that all day long. The problem is, price meant everything until you got caught with a full bucket. And when you get caught with a full bucket, it stings. And a lot of times it'll knock you out of the game. All right, so that's where sentiment comes in handy. It tells us where, on a risk reward basis, where, you know, we need to be a lot more tactical and pay attention to our risk, right? And where, you know, we should be actually bullish when everybody else is bearish. All right, doesn't mean the market has to stop on a dime right at the current spot of where some of these indicators light up. So over the short term, we're a bit hot, but on pullbacks, we still want to lean bullish. As much as you call me a perma bull, we still want to lean bullish while we have that backdrop. It's that simple. Until we lose that backdrop, there's no reason for us to throw that bullish lean out the window. You know, the market's more prone to squeeze than fall apart with that backdrop. Make sense? All right, but this is where it gets tricky now, because we're going to see, right, if the market, let's say, trades higher or flat, we're going to see some flow, right? So it's up to us now, each and every one of us, because everyone's different. People trade indices, people trade individual names and options and equities and ETFs. We have to evaluate what, you know, a game plan and a strategy based off what we see on the sentiment side and how to approach that at this point in time, where we are right now. Okay, there could be some upside, but I think the upside may not be the risk of a breather here over the short term. And listen, the breather you may be okay with. Maybe, right? Maybe the way you play, you're okay with a breather. I mean, again, everybody's different. The other thing, not to throw you into total confusion, but the other thing that can happen, it's a possibility, you get some rotation, right? We talk about that a lot. Rotation, you could have a market that does this from here, let's say. Let's just say, okay, I'm giving an example, all right? But while this market does this, you have a sector or two that is seeing major rotation and could be outperforming. All right, it's certainly possible. We see major rotation out there. The problem with that is what I'm about to show you here. Hold on. I'll show you the problem with that. All right, let me get this off so I can show you. Oops. Oh, I'm over here. All right. So here's the problem with the sector rotation aspect of things. Red is cooked, yellow is close to cooked, and there's no green, unfortunately. Meaning there's nothing set up with a favorable risk reward as far as individual sectors are concerned. Basic materials, cooked, actually has cooled off lately a couple days. Consumer discretionary, cooked. Consumer staples, cooked. Healthcare, cooked. Financials, one of the few spots, neutral. Energy, above neutral but room. Industrials, you can see there, a little bit of room, right? Mining, pretty much cooked. Here's another, oh no, that shouldn't be red. I don't know why that was red. But energy, here's the two energy ones that are still alive, okay? REITs, That's pretty much cooked. Utilities, a little bit of room. Technology, cooked. Semis, a little bit of room. All right. So, I mean, for me, this basically lines up with everything else I'm seeing, especially with the short-term sentiment. You know, this could breathe, this could breathe, this could breathe. All these things can breathe. Some of the market has room, right? So again, the market could go a bit higher or grind higher, but ultimately we're on the wrong side of the fence here. You know, on a lot of a big portion of the market. I mean, basically right now you have energy and financials. You got other stuff with a little bit of room. All right, the industrials, you got a little more upside possibility there. You know, so you got to be, in my opinion, you got to be tactical. Okay, here, and this is what I mean. Okay, let's say you want to buy a tech name and you want to go 3 months out, right? Well, what would be the point of going 3 months out now when sentiment's telling us the likelihood is we're going to see some sort of breather or digestion first, right? That's the thing here. All right, what throws everything, all this into total mayhem would be a complete melt up, right? Where all these things run through overheated signals, all right? And that's the rare occasion that happens, once a generation. And when that happens, start building your bunker, because at the end of that, it's usually game over. All right, so when you're seeing that happen, just while you're making money, let's say you're trading and writing things higher, just keep in mind that, you know, the end of the game there doesn't usually end too well. All right, but that's the rare occurrence of a melt up, and it happens, again, once in a generation. The likelihood is, like you've seen before, look, right? Look at all these things here. I mean, that's what I do at my spare time in amazement, right? Just look at these charts and what they've done in the past, right? Biotech hot, everybody wanted them, you couldn't get enough of them. What happened after that? They cooled off, all right? Tech here for quite a while, couldn't get enough of them, you know, but eventually they cool off, all right? Semis hot, they cooled off. Semis hot again, oh, they cooled off. You understand? No, this is all sentiment. This is not relative strength. This has nothing to do with price action. You know, this is all sentiment. So that's where we are. Okay. So the ideal scenario of right now, the ideal scenario would be some sort of breather here. And that could happen, right? What happens? The G20 falls to shit, then Trump says, I got a bigger nuclear button than you, China, and all that starts up. What do you think happens? You know, the market's going to pull back. And that will ultimately set up another decent buying opportunity. Unfortunately, guys, it bothers me more than it does you guys, okay? This happens too quick. You know, it just happens too quick. I get it. That's the problem, right? Yeah, the degenerate ETF, Saeed, you know I watch them. Right now, there's nothing there. It's gone. So that signal, what Saeed's asking, the leveraged bearish ETFs into the lows here showed us that the riffraff was playing those leveraged bearish ETFs aggressively, right? That all got washed out, gone. You know, that's all gone. But this squeeze will do it to you. Look at you guys. Look at the magnitude of this squeeze. Like if you were short, you got eaten up here, right? You got eaten up. And you know there are some out there, and I agree with them, that talk about the possibility of a meltdown. Okay, and there is that possibility. I agree with them 100%. There is that possibility out there, because what happens is you see, again, it goes back to that grabbing term, right? Everybody either wants nothing to do with equities or they want everything to do with it. That's how it's been. They're either all out or all in. There's no in between anymore. There's no in between anymore. All right. So if you get positive news out of the G20 or whatever the case may be, right, and you got players underpositioned in equities out there, there is that possibility for a meltdown, a rare occasion, you know? So you got to keep your eyes on. And here's the thing, what does that mean? Okay, I'm not looking to short this. You guys know that. You know, I'm not looking to short this. But what I'm going to do is I'm going to be quick no matter what. You know, I'm going to be quick. The longer this goes without a breather, I want to be quick until we get that breather. You know, until we get, where am I here? Until we get some of these things, which happens fast, guys. You know that. You see how fast it happens. These things, all these things here can be bullish by this week. Yeah, exactly, Ani. Sometimes it pays to just sit tight and wait. And here's the beauty of this game and why forecasting doesn't work, okay? I can go and make a prediction of what the market's going to look like 3 months from now. With everything I showed you just now, how can I have any confidence in that prediction? Okay, all this could be bullish by the end of this week, right? All this here could be bullish by the end of next week. So I can tell you right now, the market's headed lower over the next 3 months. You know, this could all flip-flop in a matter of days. That's you may not like that, but it's the truth. You know, it's the truth. And again, you see it in the price action, so you know it's the truth. You know, well, you know, it's funny because like Fisher Investments, all that stuff, that's investing, right? We're not doing that, right? We're not investors. We're traders. Okay. If you could say, oh, everything is bullish, you know, you got to be bullish here, blah, blah, blah. But you know, every single one of you out there, if we run into a little bit of turbulence into something like this, half this will hurt if you're long, right? Especially you option players. Okay. If you're all gun-ho bullish here and you run into half of this correction, you could get knocked out of the game, you know, by doing that. So we don't fall into that category. None of us. You know, I put us in the gamblers section of the market. You know, we're gamblers. You know, if you're playing weeklies, you're playing bi-weeklies, front month, you're gambling. You're not trading, you're gambling. Okay? Maybe if you're playing equity, you're trading, you're swing trading. But any of you guys flipping options are gambling. All right. And that's where if you're gambling, okay, I'm not saying in a bad way, right? You could be a degenerate gambler and lose all your money, right? And load up as a market goes up, you play the same way with no money management, no risk management, and you're a degenerate and you blow up. Or you can treat, you know, just like a professional gambler, money managed properly and wait for opportunities, wait for an edge, wait for a higher probability setup, and then place your bet. So that's all this stuff is we're looking at. You know, so right now, exactly like Ani just mentioned, right now, all right, for us gamblers, placing a big bet on the long side here is probably not worth it. It's probably not worth it. You know, let's see what the market looks like going into this, out of this week. Let's see where sentiment is at the end of this week. You know, maybe we're in better shape. Maybe we're in better shape. A couple other things. You guys know I don't talk macro and all that, but a couple of you guys were asking me on my opinion and stuff like that. Not that it matters, but there's two things. You got the G20. Okay, they're not looking for a trade deal, obviously, but they're looking for a love letter of sort again, right? From Trump and Xi and all that. So they're looking for anything they can hang their hat on. That's promising. But here's the problem for where we are right now in the market. All right. And again, I don't trade off any of this. I wait for the signals to confirm it anyway. But it's good to pay attention to this stuff anyway. The problem is that good news is not good news. Okay? You understand what I'm trying to tell you? If we get any economic numbers or any good news coming out of anywhere, okay, it doesn't relate to good news in the market. Why? The market wants that rate cut. You understand? And what the market wants, the market gets. All right? So if good news comes out of the economy, or anywhere for that matter, and the Fed decides to hold back again, which I think already the market may be pissed off that they held the first time around, but if they pull away from the July cut, you may see the market throw another tantrum until they get that cut. All right? So, good news is not good news, and basically bad news is good news, but you don't want the bad news to be too bad. Now, I know it sounds ridiculous, but that's where we are right now. Okay, meaning if we get economic numbers and they're a travesty, a disaster, okay, the market's going to say, that's it. They missed the boat. The Fed's too late. They played games. They hiked in December when they shouldn't have. They didn't cut here in June when we wanted them to. It's too late. They're behind the curve. Okay. So think about, that needle that's got to be threaded here so perfectly for, things to line up completely bullish. That's where it is. Now, if we were down here, okay, if we were down here and the economic numbers were a disaster, okay, what the market would likely say is, okay, the market's been factoring in disaster, and we're going to get the Fed now to cut rates. So, it's in prices. But we're not down here anymore. We're all the way over here now at highs. You understand? It's a big difference now. So that's where we are as a whole, even on the macro side. Tough. It's tough here. Tricky. I just listen, the way I'm approaching it, okay, I'm going to day trade. I'm going to do my things day trading. Anything I'm going to swing trade, I'm looking to be really, like I said, tactical. And I'm looking to have as little as any exposure to the indices as possible. So if it's an under the radar type play, right? And here's another thing, like you guys may not see right now. If you look around, like some of the strongest names, they're all recession names. You know what I mean? They're all recession names. Like they're all recession type names that are doing well. And look at like Walmart, Jesus Christ. So you look, even if the market pulls back, look for these names for flow and relative strength and better price action as hiding spots to maybe, a little turbulence if we get it. Yeah, Hershey's has been insane. Insane. But you see like the dollar stores, Dollar Tree, Dollar General. Look at Dollar General. Look at this move. You buy these names when you're going into a recession. Like I remember these names, the last recession, these names, you would think they were hot tech names. That's how hot they got. Everything else just ends up in chop. That's what it seems like. The bulk of stuff. But again, we don't know how long, we could be in a recession already. We probably are. If we're going to end up in a recession, we're likely in one already. We just don't even know it. We don't even know it. So again, what I'm saying is maybe be more of a stock picker if you're looking to swing stuff rather than, what you don't want to do is get long, an Apple at the, well, Apple's not even that bad compared to some of them, but you know what I'm saying. Some of these stocks that have just gone up in a straight line and think that, they're just going to continue. Like, look what happened to AMD today. I mean, last week, right? Looks like getting some momentum together, right? Loses its footing. Then you got that blacklist that gets put on. Now AMD gets tough here now, right? Now you got that overhang on AMD, gets tough. And you never know. That's the type of market we're in. You never know where, who's next. You never know. That's why names like, the recession-proof names are going apeshit. They're all going into these things. Yep, exactly, Yossi. That's why, I think the sentiment aspect of things is so crucial, okay? Because it doesn't matter. If we have sentiment on our side, it doesn't matter, how bad. You're not afraid of bad news because it's already in the stock. It's already in the market. But when you have a market at highs and you get hit with a headline, it can get hit. Yeah, shop has nothing to do with anything, right? Shop is basically what? Discount buying online, isn't it? I mean, I don't know shop as a business well, but that's why money's pouring into it. They're not affected by anything that's going on. Their growth is ridiculous. I mean, look at this chart though. Look at this. The chart's ridiculous. You gotta, if anything, you gotta wait for some breathers in these things to buy them. I can't even buy them off breathers, but that's where you would look. That's where you would look. What I'm also hoping is maybe we get a little bit of digestion, and then they really come hard after these names. Caterpillar has had a nice move here, but there's still upside. You don't want to chase. You don't want to chase. You want to wait for another breather at least or a pullback, and that's what I'm hoping we get. Yeah, that's what I'm hoping we get. All right. Let's take a look at futures and then we'll wrap it up here. What do we got? Anything going on? Same old, same old. So yeah, the plan is to remain tactical here and wait for a little bit of a breather. If we get a breather, could set up some stuff nicely, We got a little lift. What are we up like? 6, 5, 7. I mean, we're 50 points away from 3,000. Can the market grind there, right? Can we get there and then finally there's a breather there? That's certainly possible. That's the other problem too with us. Like if we see the market up tomorrow or the next day, all this stuff that we're talking about and went over today goes, a lot of people like to throw it out the window, and they forget everything, we just went over today. And it's even stronger the point, even stronger the point. But we got room for a little more upside. Don't think we can't go higher from here. We got room for a little bit more upside. All right, so if we can day trade and stay tactical, we still want to play a little bit. We just want to be careful holding. You don't want to get caught with the bag, even if it's a little pullback. Anybody have any quick questions before we run here? And I leave you to your Sunday evening. MO, let me see MO. Oh, I thought MO was doing well. There goes that, huh? There was put action in that, no? Yeah, the stop loss is without a doubt. You can stop yourself out. The problem is you're probably going to get stopped out a lot because things are going to be choppy out there. But here's the problem. I don't know if I'm pronouncing your name correctly. Kashik, here's the problem. The problem is, even if the market goes higher, you really don't know what names are going to go higher. I just like AMD is a perfect example. Last week was a killer week, right? Last week was a killer week, and AMD you would have lost money in. There was actually several names you would have lost money in. So I think that's the trouble you have out there. You know, that's the problem we face because we're a little bit stretched. We're a little bit stretched right now. 6 Central, Joe, you're an hour late. Yeah, it's recorded, Joe. The beginning, we focused all on sentiment, so you probably just want to breeze through the beginning. What's better to follow, sweep or a block? Sweep, no doubt about it. Yeah, William, same thing. You could catch it's recorded. The beginning of it is most of the sentiment stuff, what you and Joey are probably interested in. Prav, I don't know what you're asking there, Prav. You confused me a little bit. Which chat? Where do you see Jesus's questions? What do you mean questions? You lost me. I'm lost. The difference between a block and a sweep is the type of order. Oh, that's a good reminder. Here, okay? Anybody who is new to this, I should have done this at the beginning. I expect everybody to know my terminology and everything. You go to wallstreetjesus.com. You could get the link off my Twitter too, all right? And right here, strategy. You see that? You click on that, and here you go. Tells you everything about a sweep, the difference, you know, what's the difference between hedging, blah, 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 how to use it for sentiment, all this stuff we talked about today. No problem, Adrian. So if you have any questions, also, while I'm here, might as well do a little bit of selling. We got a free no credit card trial for 3 days. You get access to this room here, all right? So for free 3 days, you get access to this. These are all the alerts, commentary. I'm on audio video all day, every day, running my fat mouth. All right, so I'm broadcasting all day long, talking. You don't need to know how to read flow. You don't need to know how to read sentiment. That's why you would be here, is for me to explain to you what's going on. Listen, that's my job, guys. That's one job. I thought about this recently too. Somebody asked the question. My job, basically, in this Steam Room and on private Twitter, all right, is to give you guys a daily, intraday daily update on how the smart money is positioned, how the riffraff money is positioning, and then you figure out how you want to be positioned. You understand? A lot of people come in here thinking, oh, you know, I'm going to buy the sweeps off the alert board there and make money. I understand there's other places that do it that way. That's not what it's about here. It's that simple. My job, the reason why I'm running my mouth all day long, is to tell you in real time what's going on in the option market as far as flow and sentiment. And you guys, we're all big boys and girls here, decide how you want to look to take advantage of it, or if you want to take advantage of it. Yeah, and exactly, Yosti. You're going to learn a lot along the way to where, again, you're going to get more just right to be able to read the flow for how to use it in your way, right? Sentiment, where maybe you have a different sweet spot than some of others. Everybody's not the same. That's the problem. When you did the free trial, you weren't able to hear me. Yeah, oh, you know what it is? There's a thing that pops up live. It says live. Oh, I know what you're saying, Trey. I know what you're saying. I know what you're saying. Yeah, and private Twitter too, guys. Again, for both economic reasons, you know, if it's you're looking for a cheaper route, right? Or maybe you're not in front of a desktop. Okay, first of all, you get private Twitter included in your membership to the room. All right, but if you're interested in just private Twitter, even you can, you know, look at that for a month if 3 days aren't enough. we've made it cheap enough. We can't get much cheaper than that on the private Twitter, but for $59.99 a month, you get all the same flow, all the same sentiment updates, all that stuff. The big difference between the room and private Twitter is I'm on audio, video, talking about everything coming in. You got traders in the room, Lucci, Yosti, a lot of other traders there that have been trading off the action and know what they're doing. Joey, and those are the two. OT, exactly. Tim is money, option trader. A lot of you guys know him in the room. He trades flow just as good as anybody out there. I'm being honest. He trades flow and so just as good as anybody out there. And he uses technicals. So that's a common denominator amongst a lot of you. You can put it this way, you can learn a lot from him. That's the most important part. I know everybody wants the levels, the stock picks. You're not going to get anywhere off just that. Okay? You're not going to get anywhere. Stock pickers run hot and cold. Forecasters run hot and cold. It's been going on for ages in this game. The thing is you want to find something, an edge that increases the odds of a setup in your favor at times, and you be able to take advantage of it for your bankroll and risk strategy. Not everyone's the same. That's the goal of this game. That's the goal, right? Find some sort of information that possibly tilts the odds in your favor at times. Yes, PFD, another good trader in the room. So that's the biggest thing. Obviously there's other things as well, but the biggest thing is the other traders in the room and the audio video. Vinny, a lot of good traders. McBob, a lot of good traders. Cash, even Lucci when he's not sitting sipping his tequila. But Lucci, when the market gets bearish, that's when Lucci comes out of his hibernation. And that's good too, right? When the market gets into bearish mode, I kind of curl up into a little ball, right? I'm sitting on my hands, and you got Lucci doing cartwheels all over the place. He's like a kid in the candy store when things get bearish. So it works well together. It works well. But if you wanted, aside from the 3-day free trial, okay, if you wanted to get a feel for the signals, you could give private Twitter a shot for the $59.99 a month if you wanted to do a month or two, and you'll definitely get a feel for things, no doubt. Sean saying private Twitter pays for itself several times. I appreciate that, Sean. All right, guys, always a pleasure. All right, hopefully we get a little just chill out this week. We got a busy headline week anyway, big week. And then it sets up a better setup for us. That's all. All right, be good, guys. Yes, it's recorded. We'll post it when it's recorded. Have a good night, guys. Good luck this week. Make some money.